Namaste dosto. Myself Akshat Garg, Manager Research Choice. And today we have a very special guest with us from Kotak, Mr. Harish Krishnan, a chartered financial analyst and a senior fund manager having experience of more than 13 years managing our favorite Kotak Blue Chip and Kotak Infrastructure and Economic Reform Fund. Today we'll have a quick Q&A session with Mr. Krishnan. So Mr. Krishnan, thank you for joining us today.
Thank you. It's a pleasure to interact with you and your viewers. Thank you.
Our viewers are very excited to hear from you. So first thing first, Mr. Krishnan, what are your views on the market from short-term and medium to long-term perspectives?
So in markets, as they always say, the short term is always going to be volatile. It's always tougher to view markets from a short term lens, especially when it comes to equity markets, which are a longer term asset class for creating wealth. In the medium to longer term, there are three broad factors, that kind of impact markets. One is, of course, the fundamentals, which is, earnings primarily. Secondly is the sentiment, and third is the liquidity. And coming together of all these three factors shapes the market view. We are positive in the medium to longer term on the fundamentals. The corporate health of India has improved quite dramatically. The earnings power of Indian companies have also increased dramatically. So both of these are very, very, very positive. The second aspect is clearly that of sentiment. Now, over there, clearly in the last 18, 24 months, we had all central banks together trying to cut interest rates and keeping it accommodative. And now we're going to start seeing a reversal of sorts. Now, per se, this doesn't impact medium to longer term views of the markets, but it does induce a lot of volatility, ups and downs of markets. And we think that therefore it brings an interesting opportunity for most of Indians who are under invested in equity markets, providing them an opportunity to get into equity markets. So we would encourage your viewers to use these opportunities as and when they come to increase their allocation to equities.
So do you think these interest rate hikes by Fed will impact Indian markets in the long term?
No, no, not at all. In the sense that, see, longer term, obviously, what matters is the earnings power of Indian companies. And
Right.
clearly, from the way we look at it, or rather, I would encourage all your viewers also to look at it, is instead of looking at newspaper headlines, think of India as a movie. And when you start looking at that, right, and you can look at progress that India has made in the last 10, 20 years, in terms of, say, the number of cars, the number of consumption that we are increasing, and try and visualize that movie over the course of the next 10 years. And I don't think, in your visualization ever a Federal Reserve will ever come into that picture, right?
Right.
And this is not the first time that they are hiking, nor will this be the last time. So as long as you're very clear on why you're investing over a 10-year horizon, I think these are all things that add to the noise, but do not really bring in any shift to the longer term thinking of businesses earning power.
Okay. So Mr. Krishnan, after considering your views on the market, if I talk about this new year 2022, which are the themes that should play out well and one should focus on?
So we are positive on broadly two big themes that are there for the medium to longer term. First is the investment cycle. As you all know, over the course of the last 10 years, India has been primarily driven by consumption because investment cycle has taken a backseat. And this was a function of many things, coming together, including the balance sheet health of India not being at its best. You had issues in the form of regulations. You had reasonably high frictional cost, be it in terms of energy. You had high frictional cost in terms of, say, infrastructure, and then you have had reasonably subdued world demand also. So it's a coming together of all of those that have meant that investment demand took a backseat. We are now starting to see a lot of these things starting to change. So if you look at the balance sheet of India, like I said, at least in the last 20 years, we haven't seen Indian corporates being in such strong position. A lot of mistakes of the past have got corrected, and therefore that is a positive. Secondly, if you were to look at the entire infrastructure and the enabling framework that has started to come through, we have seen massive changes in the way both our digital infrastructure, soft infrastructure, and hard infrastructure assets are starting to come out. And again, that is a positive. Our own competitiveness as a manufacturing hub has improved quite dramatically, be it in terms of our availability of power or in terms of, say, the currency that we are in. Wherein, if you were to look, for example, compare it to the Chinese yuan, which is what
Yeah,
which is one of our major competitors. If you were to look at it in the last 2 years, the Indian rupee has actually weakened by about
yeah,
15-16% against the Chinese yuan, making us even more competitive compared to the rest of the world. So it is a coming together of all of these that makes us positive that the investment cycle will turn. Again, the analogy that I want to give is not that, it's like a gear which moves from neutral all the way to first or second gear. Please don't think of it as already been in the third and fourth gear and animal spirits. Everybody talking about investments.
right,
Markets respect the rate of change, and the rate of change, I think, from neutral to first and second gear is impressive, and that is likely to continue. And so also along with the housing cycle starting to turn. So that is one theme that we are positive on. The second theme is clearly that of consumption, or rather discretionary consumption, and this is more a near-term kind of a phenomenon, because primarily we've seen COVID impacting, our ways of consumption.
right,
In terms of physical retailing, in terms of travel, in terms of entertainment, education, all of these are likely to see a sharp rebound whenever we see the worst of COVID behind
right.
us. And that also provides an interesting opportunity at this point of time. So these would be the two key, and of course within that there are multiple other sub themes that we think investors can potentially look at over the course of the medium to long term.
Sure, thanks. Well, I also understand that Kotak has come out with a new fund offer on the manufacture in India theme. What's your view on the same?
So like I said, in India typically has been a service dominant
Hmm,
economy, right? And manufacturing is generally seen as something which is quite difficult for India to gain a competitive edge. Now, those views are quite true. I'm not saying that suddenly overnight we are going to shift our entire axis from services dominant to manufacturing dominance. But there are six key changes that have happened in the last 2 to 3 years that makes us positive in the overall sense, right? First is, as you may and your viewers may be aware, um, our tax rates now are at 17% for new manufacturing.
right.
Now, compared to the whole world, this is possibly the most competitive tax rate that we have.
True.
Secondly, India has embarked on what is known as the production linked incentive, also called as the PLI schemes. Now, effectively, what the PLI schemes does is it reduces the payback period for new investments. So even earlier, the government used to encourage some form of exports, but those were revenue subsidies, in the sense that if, let's say, a bike gets shipped to Africa, because of export, you would be given some subsidy. Now, all that the government is trying to move in a nutshell is that they're saying you put in new capacity, bring in new jobs, and for that incremental new capacity or new jobs, you're going to be given a subsidy, which is going to be linked to the production, and which is the production linked incentive. And we've already started seeing that shape up, for example, in mobile phones. I don't know how many of you have looked at mobile phone data. From a importer of mobile phones, we are now a net exporter of mobile phones. Our mobile phone manufacturing has gone up almost 8 times in the last 5 years. Right. So currently it's close to about 2.5 lakh crores of output that the manufacturing sector of mobile phones has started to. And this we are starting to see. Of course, this is one sector where it has already played out. There are other sectors where it is starting to play out. Right, be it in terms of tiles industry, home building industry. If you were to look at clusters of electronics, we are making rapid progress out there. So consumer electronics, which is a big import bill, over the period of time. Again, this is not a magical
Hmm,
switch that
right, right.
in 3 months or 6 months things will change. We'll
Right.
continue to keep importing, but over a period of time, we'll start seeing these improvements coming through. So that is the second key change. The third key change that I spoke about was the currency itself, and which is a big change, right? Compared to the Chinese yuan, which used to be hovering around the 10 mark,
Hmm.
we are currently close to the 12 mark. So effectively, the Indian currency has weakened by anywhere between 15 to 20%.
Okay.
I spoke about the health of corporates and the housing sector also coming through. So when you add all of these, suddenly you are seeing a crescendo coming through in terms of manufacturing, and this is being witnessed now in terms of hard data, right? In terms of number of new environmental approvals, it's at record highs. Number of new manufacturing firms being set up, it's at record highs. So a lot of these things are starting to fall into place. Yes, this is again, to use the same analogy, still first gear, second gear. It is
Right.
nowhere in the third and fourth gear, and it will take time. These things take a lot of time, but therefore we think, given that we are in the initial stages of that cycle, we do expect this theme to reasonably generate wealth. The other aspect is, this index, or this theme is benchmarked to an index, which is the Nifty Manufacturing
Right.
Index. And over the last 5 years, that has underperformed the broader markets by about 5% CAGR.
Okay.
So, in an environment where overall markets have done well, valuations are, I would say, fairly valued.
Mm-hmm.
Here is a pocket where, despite all of these seemingly good things that are starting to happen, you've got overall valuations which are relatively much better off compared to the rest of the street. So, I think you're putting it all together. You're starting to see how manufacturing renaissance can try and create wealth over a 3-5 year horizon.
Okay. So do you think government push will play a big role in the manufacturing theme since they are aiming for the 5 trillion economy?
So I think without a doubt, the government is a key enabler, right? And enablement is also a function of, say, low tax rates. It's a function of the PLI scheme. It is a function of import duty hikes, or the duty tariffs that they have kind of. So these are all positives that the government has already done,
Right.
right? Obviously, we hope that they don't flip flop on
Right.
these policies. But by and large, the overall infrastructure push that they've been doing, be it in terms of logistics, very soon we'll have the dedicated freight corridor on the western side being operational. All of these is all a function of making our industry more competitive, right? Ultimately, the industry has to now to come forward and invest and be competitive, focus on futuristic products, invest in R&D, so as to be more competitive. I mean, it is like taking a horse, to drink. You can't force it
Right.
to drink, right?
Right.
So the government has played that role. It's a catalyzer. It's an enabler of reforms, and I think they have done a reasonably good job to take the corporates and the housing to kind of revive. Now it is up to them to take it forward, and hopefully the government doesn't backtrack. I mean, that's a key expectation that we have, and which we'll have to watch out for.
Right. Mr. Krishnan, before we end up this Q&A, I would like to understand your take on one thing. As I see that this bull run has allured millions of new age retail investors, what piece of advice you would like to share with them as they have seen only one beautiful side of the coin?
So I think, yes, today's investors which have come in are also smarter investors. They have also gone through multiple amounts of research. So it is not only the earlier form of investors, which are, primarily tip-based investors.
Right.
But at the end of the day, investment is also, while it is very nice to say that, you need to have a mathematical or an analytical bent of mind in finance, investment is also about the gut, which is basically the behavioral part of it, and which is where, greed and fear is something that is universal in all asset classes and in all markets. We have all experienced, the as you rightly put in, one side of the coin,
Yes.
um, and and it'll be foolish to believe that one can only see that side of the coin,
Right.
right? You will have to be prepared for the other side, and it isn't that it will come announced beforehand saying that the next 6 months is when it is going to be fearful, right? It will catch you by surprise. But so therefore, please put in only that much capital that you think you are genuinely looking out for the longer term. If you're looking at capital that's going to come out in the next 6-12 months, I don't think equity is the place for you.
Right.
You need to have a view that this is the capital that you're going to use possibly 10 years from now. And when you view in that construct, these falls and the fear that the markets will keep providing you actually become opportunities for you to actually benefit from, rather than to lose sleep on. So I think please look at the behavioral aspect of it. Over a period of time, whether you're coming through direct, whether you're coming in through pooled vehicles like mutual funds, etc. At the end of the day, have realistic expectations. The last 18 months have been very good. It is unlikely to repeat itself, nowhere close. I think so. Therefore, moderate down your expectations. More importantly, elongate your horizon, and be modestly positive on the prospects of the overall investments that you have done.
Millennials who are watching this video, note down this golden advice by Mr. Krishnan. Also, I also request all viewers who are watching this video, if you want to participate in the growth story of India's manufacturing sector, invest in this coming NFO by Kotak, which will be live on 1st of Feb. Mr. Krishnan, I would like to thank you for giving your precious time to us.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.